aft. Let's address that. Titagarh Railways, and we've got Umesh Chowdhary, the Vice Chairman and MD at Titagarh Rail Systems, joining in on the show right now. Mr. Chowdhary, good to have you today on ET Now. Thanks so much for your time. Firstly, I wanted to talk about supply shortages because it seems like that has hit the wagon output hard last year. Tell me, what's the outlook going forward? By when is it that you think you'll be fully insulated from such supply shocks?
So, good morning and thank you for having me with you. So, as far as the wheelset shortage is concerned, so we have, as you're aware, operating in two segments: the freight rail segment and the passenger rail segment. So, on the freight rail segment, the wheelsets primarily we are dependent upon Rail Wheel Factory, Bangalore, which is a Ministry of Railway unit for supplying the wheelset, particularly for the wagons that we make for the Indian Railways. And they were having some serious production challenges since the beginning of this calendar year. And that kind of accentuated in the last quarter, and the wheelset problems or the supplies were at an all-time low. And that was the main reason why, I would say that was the only reason why we could not meet the targeted production. But fortunately, over the last 2-3 weeks, we've seen that the production of Rail Wheel Factory has normalized. And now the production is also picked up. So we believe that that problem is a problem of the past.
Now that order inflows also are perking up, are you confident then of execution ramp up too?
So we have about, as we announced in our press brief, which kind of gave our outlook of all our business units. We have an order book of more than 10,000 wagons, 10,500 wagons, which is a good kind of visibility. And the only issue was the availability or non-availability of wheel sets. With that resolving, we have absolutely no challenges whatsoever in execution. In fact, our foundry expansion is also coming in track within this quarter and the next quarter. So whatever castings that we were buying from outside in order to achieve the target run rate of, say, 900 to 1,000 wagons, that also would be completely, will become self-sufficient for the foundry capacity as well. So on the freight railway side or the freight system side, the wheelset problem resolving, we don't see any challenges. As far as the order is concerned, as we mentioned in our press brief, that we have seen some order coming in. We have booked in the last period about close to 1,000 wagons. But these are smaller tenders that have been issued by the railways. We expect and we hope by the end of this year or beginning of next year, there should be the larger tender that should be floated by the Indian Railway as well. We have seen good traction of inquiries coming from private sector customers of wagons.
All right, that's interesting to note. Very good morning, Mr. Chowdhary. This is Shrishti also joining in. But you plan to ramp up the metro coach output to 50 cars per month by FY27. How aligned are the current infrastructure and the vendor readiness to deliver that without any delays?
So very interesting question. So that's exactly what we are working upon. And like I had mentioned that the additional land that we have acquired, which was very, I would say, fortuitous because it's contiguous with our existing facility. And I mentioned in the earnings call yesterday that the only way we had to take the possession of that land was to break open the boundary wall that our existing boundary wall. So that's very, very strategic to us. And one of the things that we are doing there is doing backward integration. So and I had mentioned this earlier also last year that our whole strategy is surrounding on backward integration is surrounding three key aspects. One, where we are leaving too much money on the table. So if we have margin attrition happening because of limited supply chain availability, we are doing that in-house. Second is wherever we are presuming or we believe that there may be in the long term supply chain constraints, that is something that we are onboarding to be produced in-house. And the third is whatever we can sell in the after-sales market. So we are focusing a lot on building or supplying with services. So for example, on wheel sets, so during the lifetime of the asset that we sell, the wheel set demand comes up 4 or 5 times. And there are many such components that happen. So wherever we believe that we are creating our own aftermarket, we are doing that as a backward integration. So with these three filters that we put for ourselves, we are planning our backward integration. And as I said, the number two, which is supply chain availability, is a very, very important one to that. So to answer your question, supply chain in the industry that we are in always has been a constraint. But the only way we can overcome that is by planning it well in advance in terms of both developing vendors, but also backward integrating ourselves.
All right, but along with that, interesting to know that you have become India's only aluminium metro coach maker. Will your edge be driven more by the pricing competitiveness or the performance benefits?
So aluminium is more expensive than stainless steel, but that's only on the capital cost basis. On a life cycle cost basis, it is much more cost effective, because firstly, aluminium is about 2 tons lighter, so almost 15% lighter in terms of the car body weight, 15 to 20% lighter in the car body weight. So if we just consider the kind of fuel saving that it provides over the life cycle, which is 35 years of asset, the whole economics is very much skewed in favor of aluminium coaches. That's the reason why worldwide now aluminium coaches is picking up traction, and you see in most of the advanced countries a lot of, while stainless steel continues to coexist, but a lot of movement is happening towards aluminium coaches, and that's going to be hopefully the trend in India also in the future. The problem was that there was no availability of aluminium coaches. So even in our earlier contract, in the Pune metro contract, for the first 102 cars, we were importing the flat packs from our associate in Italy and then assembling the aluminium coaches over here. But for the additional 12 train orders that we have got from Pune Metro, we have decided to set up the entire facility in Calcutta. And as a matter of fact, as we speak, the machines have already been dispatched from Europe, and they would be arriving into Calcutta within the next month or so. So that will make us comprehensively an aluminium coach manufacturer, alongside with being a comprehensive stainless steel coach manufacturer.
Mr. Chowdhary, can I request you to just stay with us for 30 seconds? I have a lot more questions for you, but I have to take this commercial break. We'll be right back with First Trades, and we're still in conversation with Mr. Chowdhary from Titagarh Rail Systems. Mr. Chowdhary, what I wanted to also ask about is the simultaneous investments that you're making in defense, shipbuilding, propulsion. Tell me, how is it that you prevent capital dilution away from the core railway business, and what is your plan for these other segments?
So again, very interesting, and thank you for asking that. If you see the press note, it's very clear that this is exactly the question that came to our mind as management as well as in the board. And we felt that, true to our name, we should be on the railway system business only. And strategically, we should, at the same time, not just throw away building up credentials, building up expertise, building up teams for executing both the shipbuilding business as well as the defense and bridge business. So the board has decided that the shipbuilding business is going to be demerged into another company, which is initially going to be a wholly owned subsidiary. But we will be open to looking at partnerships there, or joint ventures, or strategic investors, or whatever it might be. But the idea is that without disturbing the core business, which is the railway business, which is going to be what is remaining in Titagarh Rail Systems, the shipbuilding business is going to continue in the new company and is going to grow in the new company. And the government has very clearly articulated that shipbuilding is a thrust sector for the government, both for infrastructure purposes, but also for nation building purposes. And therefore, having built more than 35 vessels in the last few years for the Navy, for the National Institute of Ocean Technology, for the Coast Guard, and all of that, we thought that it will be a national waste and a shareholders waste for the company to just kind of let that go, but also to not allow that to infringe upon the core sector business of the company, which is the railway system. The similar committee has been constituted to evaluate what we should do for the defense and bridge business, which is primarily carried out in the Bharatpur unit, in the Rajasthan unit. And the committee will, over the next 3 to 4 months, finalize with the support of external consultants, if the case may be, and define a strategy for the defense and bridge business as well. But as far as the parent company is concerned, Titagarh Rail System, we are very clear. We would like to focus on our core sector and propulsion. To that effect, as you mentioned about propulsion, propulsion is actually at the heart of the core sector of railway. So that is going to be the biggest game changer for us compared to many other coach manufacturers in the country. And as we have given in our press note, we have an order book of more than 500 crores that we have already built up in our propulsion business. And a lot of developments in terms of product approvals, setting up facilities, setting up expertise, design, and test laboratories have already got completed over the last couple of years.
To know that, but also, Mr. Chaudhary, the railway budget allocations, as we know, that they are flat, while the metro capex is seen to be rising. How will this shift in the public spending reshape your freight versus the passenger revenue mix in the next 3 years? If you can give us some sense.
You see, we believe that the freight, as we have also said earlier, the freight is something where we are at cruising altitude. So, we are doing, let's say, between 800 to 1,000 wagons a month. And we believe that considering the overall demand, while we can enhance our capacity, particularly with the expanded foundry, we can enhance our capacity to go up to maybe 1,000 to 1,200 wagons per month. But considering the overall demand scenario, we believe over the next few years, it is going to be a business that will give us a volume of between 1,000 to 800 to 1,000. So let's say a mean number of 900 wagons a month. The real growth for us is going to come from the passenger rail segment. Even if you see the order book, the overall order book of the company, including its share of joint ventures, is 26,000 crore, out of which the freight business is only 4,000 crore. So now this is a business, by the way, which used to contribute to maybe 95% of our revenue historically. So that's a telltale story of how we see the other businesses to start contributing on the overall numbers of the company.
Right. Mr. Chaudhary, thank you so much for your time today. Good speaking with you.
My pleasure. Thank you.